Hello and welcome to the Gold Newsletter. My name is Kai Hoffmann. I'm the JR Mining Guy over on X, and together with Brien Lundin, I'm the host of the Gold Newsletter channel. I'm excited to welcome you to a company reintroduction. We've had the company on this channel a while ago, but it's time to sort of reintroduce the company, see what they're up to. They're quite active. They've put out a PEA already in June 2023, drilling actively, updating drill results, and of course I'm going to ask them what are they doing with those drill results, what is there to optimize in the PEA, and what are the next steps. Of course, I'm talking about Wallbridge Mining, and I'm being joined by the CEO, Brian Penny, and of course by their senior geological consultant as well. Really looking forward to the discussion because I think there's lots to learn and there's lots of opportunity in the Abitibi, and I'm looking forward to learning a bit more about the northern part of the Abitibi. Brian, Mark, it is great to welcome you on the program. Thanks so much for joining me.
Well, thank you. Thank you for having us, Kai.
Yeah, really looking forward to the next 20, 25 minutes here with you, gentlemen. Really want to learn more about what Wallbridge is up to. But before we dive into some of the details, Brian, maybe you can give us an overview of the company. 60 seconds, who and what is Wallbridge Mining?
Well, Wallbridge is a gold-focused exploration company. We're focused on the northern Abitibi. We have a property position that's 830 square kilometers on strike with the Detour mine. The Detour mine's on the Ontario side. We're on the Quebec side. You've mentioned we completed a PEA. We're advancing the project, and our long-term or mid-term goal is to put together a combined PEA in early 2026 on the two projects, Fenelon and Martiniere, which are in that property position and about 30 kilometers apart.
Perfect. No, I appreciate the introduction there, Brian, and of course I got some questions to follow up. But before we get into some of the the plans for this year, just to get us all on a level playing field here, real quick, capital structure. We need to talk about it. What does it look like?
Our capital structure, we have about 1 billion shares outstanding. Eric Sprott owns about 16% of the company. Agnico Eagle owns 9.9%, and they have participated in all the financing since Kirkland Lake bought that interest many, many years ago. And the next biggest shareholder is a contracting firm out of Sudbury called William Day Construction. They've been around for quite a few years, since we were a nickel explorer in the Sudbury Basin, and they own about 6% of the company. The balance of the company is owned by small institutions that we can identify and retail shareholders, and about 1% of the company is owned by insiders and the board.
Perfect. How much cash do you have right now, Brian?
Right now, I can't answer that because I haven't put the cash balance out as of today. But what I'll tell you is that, at the end of the last quarter, we had $27 million in the bank. We're looking to close the year with about $13 million in the bank. We are blessed to be exploring in Quebec and the refundable tax credit regime. Last year we applied for a refund of $8 million. When we filed our tax returns, 60 days later, we got the money. So, it allows us to continue to reinvest because 38 cents on every dollar of qualified expenditures we get in the form of a cash refund. So, in pretty good shape. Assuming a similar program as this year, which is $21 million, we would look to raise, $7 million or so to fund the balance of next year's program, at some point in time. But we've got probably the best part of a year to raise that money.
Yeah, like 38 cents on the dollar you get back. Like, how much do you expect to get back then in early 2025 for this year's expenditures?
For this year's expenditures, it's subject to mandatory audit. You file your tax returns and you claim it. This year we got a quick refund. I think it's because we've been at this for 5 or 6 years now, and we've developed good credibility with Revenue Quebec. As for 2025, usually we get the refunds in late third quarter, early fourth quarter, and it could be $4 to $6 million based on our estimated spending this year.
Okay, that sort of might save you going to the market for a bigger chunk of change. So that's not too bad.
The challenge is timing.
Yeah, absolutely. No, that makes a lot of sense. Brian, you opened your last answer with 1 billion shares outstanding, and of course the logical question I'm sure you're getting almost every day here is like, what does that look like? What are your plans? Are there any rollbacks in the making, or are you thinking about those?
Well, for a company to do a rollback, you have to have a reason. If you don't have a reason and you do a consolidation, you're going to lose 10 to 20% of your market cap. Right now, it's not broke. We will continue to go on. But if there's an opportunity at some point in the future to do a sensible consolidation, we will consider it. But right now, it's off the table.
No, it makes sense. Makes sense. As you said, you need a catalyst, and maybe the combined PEA for Fenelon and Martiniere is that catalyst. So
it might be. It might be.
We'll see. We'll get to that point in the questioning in a second here. But Mark, run us a bit through the stage of the projects right now. Where are you sitting? Like, how far along the development curve are you?
I would say, with respect to Fenelon, we're about we're at PEA stage, and still looking at ways to optimize the project, with more in-depth technical studies about what's the best way to go forward, over and above what's already been published. So the resource at Fenelon is pretty well fleshed out. I do think we see some opportunities to do a bit more, but this year right now, as Brien mentioned, we've got the kind of the companion Martiniere project, that's maybe a few years behind in terms of fleshing out a resource with the drill and technical studies. So that's really where the emphasis of this year's program has been placed. We started out the year. We finished off a program at Fenelon in the first quarter that really had commenced about a year prior, of just infill drilling, and some close-in step-out type of work. And then we moved the drills over to Martiniere, and we commenced in, I believe it was early March, drilling at Martiniere to really capture enough information to support some of the preliminary technical studies that really need to be done. For example, collect enough material for metallurgical test work, which we accomplished very successfully, and that material is currently being tested by SGS Lakeshore, one of the world's preeminent metallurgical test laboratories, and as well geotechnical data for rock characterization. So not real sexy stuff, but really critically important type of work that you need to do at the front end of any project, in addition to fleshing out your resource. Right now, we've in mid-July, we commenced our second phase of drilling at Martiniere, and that is really entirely exploration work. We're still trying to define the outer limits of the gold system that's there, and we're having kind of a nice problem to have, because we're open in all four directions, as well as vertically at depth. And we're not drilling deep targets right now, because we're having a lot of success with the drill, just drilling around the periphery of what's currently in the defined resource. And every direction we've gone so far, to the southeast, to the north, and to the south, as well as a bit to the west, we're continuing to hit mineralization in the drill core. So I'm quite excited that we've got some real upside opportunity in front of us here to grow Martiniere beyond the size that it is right now.
No, so, sounds interesting. Let's stay on Martiniere. I was going to ask you a few more questions about the PA, but we can shelve that for a second here. Martiniere drilling, like, run us a bit through the budget and the phase 2 drilling scope as well. Like, how much are you planning to spend? How many meters are you going to drill?
Okay, in the first and second quarters on that phase 1 drill program that I described, we got about 11,000 to 12,000 meters of drilling completed, and that was to plan. We actually, the drilling company, and it's the Abitibi, so it's really some of the best drilling conditions in the world. We're drilling very fast, very efficiently. So we even got a little bit of exploration drilling done in that first campaign. So that was about 12,000 meters. In terms of the cost attached to that, I think I'd leave that to Brien to speak to more directly, because he's more the financial guy here. But on this next phase that we're in right now, in the midst of phase 2, which is the exploration component, we've scoped out another 6,000 meters of step out exploration on satellite targets, and we may actually exceed that time and budget permitting.
Appreciate that. Mark, real quick, just following up on phase one, like to get to a resource, like what do you need? Like what's the spacing necessary, and did you achieve that with phase one?
Yes, and I neglected to mention that there already is a resource at Martiniere. It's on the order of, off the top of my head, about 600,000 ounces in the indicated category, and about the same amount in inferred right now. In terms of your question around drill spacing, because that's always quite relevant in these when projects are at this stage. The drill spacing ranges from something on the order of, say, 35 to 50 meters. That'll get us into indicated, up to, say 100, 150 meters maximum. Because it's the type of geology that you have in the Abitibi, you can't take big, bold step outs the way you may be able to in another type of a geologic environment, or a metallized system. But overall, that's kind of what we're working with here. And in our satellite targets, just to put a little bit more perspective to it, they're on the order of anywhere from 300 to 500 meters outboard of the limits of the current resource.
Okay, Mark, maybe I missed it, but what was the goal of phase one? Like, what are you trying to achieve with those results? Like, what was the exact goal?
Yeah, the exact goal was to do some drilling to essentially drill into areas that we already know we had good, strong mineralization, in order to capture enough material to generate a bulk metallurgical sample for test work. That we achieved, and in parallel with that, we did quite a bit of geotechnical drilling, downhole televiewer surveys, oriented core. We basically do oriented core on everything, because that geotechnical information goes directly into characterizing the rock mechanics, how the rocks will break, which matters to a mining engineer very much when you're trying to conceptualize putting a mine plan to your resource. And then, a collateral benefit of all of that drilling was that it also did serve as infill drilling, because all of the sampling we did is going right into the geologic database.
Fantastic. Okay, timing for a resource update there, Mark. Last question on the drilling and what you've just done. What's the timing on the resource update?
Ideally, we'll have something in place early in the first quarter of next year is what I would envision.
Perfect. Brien, to bring you back into the conversation, you need to run us a bit through the KPIs of the PEA. And of course, as a follow-up, that's part two, which is a bigger question almost. Like, why combine Fenelon and Martiniere, and what's the scenario? What's that going to look like?
Well, it's interesting you bring that up, but first of all, to add on to what Mark was talking about, is the cutoff for the Fenelon PEA was in late 2022. We did publish a resource estimate early 2023, PEA mid 2023. So last year we drilled 49,000 meters. This year we're looking at drilling 23,000 meters. Yes, some of it is regional stuff that's not part of the resource estimates and the ultimate studies. But that information needs to get into the database in addition to whatever the results of studies and network and other things. So there's a lot of moving parts to this. Yes, when we started this year, our big, hairy, audacious goal was to put together a combined PEA, get Martiniere caught up, because we thought that was the best way to go forward. And we still think ultimately it would be the best way to go forward. But, we've learned a lot about Fenelon. We need to get all this material in, see what it does to the database. We're going to have a complete different price deck than what we had last time with the PEA. So, we need to get that in, look at the results, and see what it does to, the PEA on Fenelon, which will be combined into Martiniere. So, the first step is to update all the models and everything to see where we are. The second step is to get Martiniere a position where we can consolidate it and then figure out, how the two fit together. We believe there are synergies. We need to prove it to ourselves over time. The preliminary PEA at Fenelon, or the first go round, we're talking about 200,000 ounces of gold a year, $160,000 a year of cash flow, initial capital of 645. It's an underground bulk mineable scenario. Closest proxy that we come up with is Young-Davidson, and sustaining capital over the remaining life of 594. The shaft is obviously been pushed into the sustaining capital. We'll start off by extending the mine, operating that way, and then, during commercial production, once we have cash flow, we would look to fund the development of the shaft. Total cash costs estimated at 750 and all-in sustaining costs at 925. And our after-tax NPV is 721. That's why we believe we're grossly undervalued. Our current market cap is about $80 million. So it's a little better than 10% of our, NPV 5 on the project, which is a function of, the current market, the lack of investment in junior equities. And that's why we have to be smart. We have to be creative. And, we're doing a great job in using the Quebec tax incentives to continue to advance the project to minimize dilution as much as possible in today's market.
No, fantastic. I appreciate that, Brien. And Mark, maybe back to you real quick. For Martiniere to be included in a combined PEA, like what's the distance between Fenelon and Martiniere? And B, what kind of cutoff grade would you need at Martiniere to make it feasible?
Okay, there's two questions there. The distance is 30 kilometers. Martiniere sits 30 kilometers west of Fenelon. And in terms of a cutoff, I'm a bit reluctant to say without seeing, more of the in-depth technical work to be done. But I believe it would be, on the order of, what you see for things, things in the Abitibi, somewhere between 1.5 and 2 grams in order to make something, economically viable.
Okay, no, appreciate that. And maybe as a follow-up there as well, metallurgy is a big one, of course, which you mentioned a couple times earlier, Mark. Yeah. I know you've sent in only a sample. Is there any results available already from the metallurgical side, like from the past?
No, Kai. Not so far. The results, the sample material arrived at the lab in late June, and it's bench scale test work. So that typically takes a lab. On the order of at least 3 or 4 months just to go through the paces, because it is a bit of an iterative process where whatever you get in the result of your first test determines what you're going to do next. So it's not necessarily a straight path, but in my experience, and I've taken a number of projects through their paces all the way to commercial production. In my experience, that's what I expect at this point on the curve.
Yeah. Okay. No, gotcha. Maybe I'm getting ahead of myself here because metallurgy is a big part, of course, in the economic viability of any project. To stay on the exploration side real quick, Mark, I saw you put out some drill results recently from phase 1. Do you want to run us through those, and how do they fit into the existing known information?
Sure. I don't have all of the results or the news release open in front of me, but overall, we drilled. We drilled across the deposit. Obviously we were targeting areas where we knew we could get high grade information, and also where we knew we needed to get a better handle on just the rock mechanical characteristics. And what really stands out to me, without getting lost in the weeds on an individual drill hole here or there, but what really stood out to me and really came into focus in preparing that news release was how frequently, especially along the Bug Lake zone, there's 2 trends at Martiniere, but the one that we call Bug Lake is the main one we're focused on. No matter where we drill, we hit high-grade gold intervals quite, I wouldn't say every time, but there is a lot of high-grade gold distributed throughout the whole system. And the downhole lengths of those types of intercepts can range from anywhere from a meter to a few meters, but in general, just the broad distribution of high grade hits, it really speaks to a much larger gold mineralized system. And just for comparison, when you look at Fenelon, when I look at Fenelon, it's very similar in that way. And right now, I think the combined resource at Fenelon is on the order of 4+ million ounces combined, the two categories. So I feel very, very strongly that Martiniere has the same amount of momentum behind it. The key is really just unlocking that at the face of the drill bit.
No, got you there. No, appreciate that. Just trying to figure out, like, combined PEA. Like, usually you advance, go to a PFS, and maybe that's a question for you, Brien. Like, why go back to a PEA and not do a PFS or even an FS? To get ahead of ourselves here.
Well, in order to answer that question, I go back to last October. We are putting together our business plan for 2024. We had three options. One of the options was we go pens down, we shut down the exploration properties, we keep our residual cash, and we hang on for better markets. No news flow, that's not value accretive, so it wasn't an option. I remember the mid-90s like it was yesterday when gold hit 250 and the entire industry went pens down on exploration. It took a decade to catch up. So, very quickly we looked at that and said that wasn't an option. Then we had two other scenarios. One is traditionally you need to go, after you do a PEA, you go to a pre-feas. In order for us to do a pre-feas with all the engineering studies and infill drilling and other things, we would need about $50 to $60 million. That would have represented almost a 50% dilution to our shareholders. Compared that to what we decided is we raised $10 million of flow through, continued the exploration, focusing more on Martiniere to continue to advance the project at a slower pace, but still provided us news flow, and it allows us to assess both projects and see how they fit together. Seemed to be a logical way to go forward.
No, fully agree. That makes sense. No, appreciate you sharing that. I'm trying to figure out, like, what is the business plan overall, Brien? Like, if you were to zoom out now, 30,000 foot view, what's the end goal? What's the business plan?
Well, our business plan is, we're an exploration company. We want to continue to advance the project. We're doing all the environmental studies and all the work necessary to continue to de-risk the project. Right now, could we build it on our own? Absolutely not. We don't have the market cap to support it, but we need to continue to de-risk it, which will hopefully unlock value. And then at some point in time, somebody will tap us on the shoulder and say, we can do a better job. Here's this. Or ultimately, if markets really improve and we have the ability to finance it, maybe we build it. But, right now, I think the likelihood of us building it is very low.
No, at 80 million market cap, you have to be realistic. Absolutely.
Yeah.
Just out of curiosity, since you mentioned the markets are so weak, have you looked at any other opportunities in the area where they're to consolidate the whole northern Abitibi potentially?
Well, that's a very interesting question because there's a lot of juniors out there that own lots of property and they're long on property and short on cash. We're long on property. We have 830 square kilometers of property. And to put it in perspective, that's the size of the city of Toronto. So we've got a massive prospective land position. And for us to add to it would just put more avenues to spend money into our portfolio. And we need to really, really focus on what we have because we have something pretty special here.
No, fair enough. It was more of a fishing expedition to see whether the strategy has changed the last two years because these markets also create a ton of opportunity, of course. So
yeah, I know. And with the benefit of hindsight, in 10 years, we can chat about this and figure out if we made the right decision or not. But based on what we know today, that's a prudent way to go forward.
No, hindsight is always 20/20. But Brien, maybe to sum up the conversation here a little bit as well. Like, what are some of the next steps now? What can we look forward to? I'm assuming phase 1 drill results are next press release, most likely.
Phase 2.
Phase 2? Like, you haven't put out all the phase 1 results yet, have you?
Yes, we have.
Oh, you have? Oh, okay. I missed that. I thought I only saw like half of it were put out. So, I apologize.
No. We're in a position now where we tend to finish a program, put out the results, rather than putting out the results of one program and 2 or 3 news releases. We like to, get all the answers to distribute. It's just it's a more prudent way of reporting. But, the balance of this year, we got the MET results. We got continued drilling on Martiniere. I'm sorry, phase 1 is completed. Phase 2 we just started. You're absolutely right. We have some regional work we're going to do, and maybe we extend the Martinier program based on results, or maybe we do a little bit more drilling at Fenelon when it comes to the end of the season in October.
No, fantastic. What's the next press release going to be then?
It will be on phase 2 at Martinier, or maybe before that will be the results of the metallurgical testing. But the two will be close to each other.
Gotcha. Fantastic. Brien, Mark, I think it was a good comprehensive overview, and good to catch up with you again here on Wallbridge Mining, and really appreciate your gentlemen's time. Can't wait to get another update, and we'll probably see each other in Beaver Creek here very soon as well.
You will. Thank you very much, Kai.
Fantastic, everybody else. Thank you so much for tuning in. I hope you enjoyed this conversation here with Brien and Mark of Wallbridge Mining. Really good to get an update. The company has a ton of ounces, a low market cap, and lots of opportunity in the northern Abitibi. Let us know what you think of the conversation. Did we ask the right questions? What else should we ask? Let us know. We do want to hear from you, and we'll gladly invite the gentleman back on the program to ask those questions. So thank you so much for tuning in. Make sure you like, follow, and subscribe to the channel. Thank you so much. We'll be back with lots more here on the Gold Newsletter.